Hey guys, Tony, how you doing? I did get a request for, I think the ticker is ELY, yeah, ELY, and it's for Callaway Golf Company. I'm not gonna make this video too long because I basically already did the TA on my back end, and you know, I'm gonna make it straightforward. I think it's gonna go up. You know, within the next 60 to 70 days, I think you're gonna see at least somewhere between, you know, a $7, $10, $15 jump from these lows of, you know, what is it? Like $27. You know, historically, after the stoke creates, you know, relative bottoms and you have bull triggers on the weekly, you tend to run $10, $12, $7, you know, $3. You know, it's all relative to about 60, anywhere between 50 plus days to 60 plus days. And I would definitely not be surprised to see runs like this over the course of the next, you know, 2-3 months, especially when the monthly is already showing, you know, signs of a really weak, you know, bear momentum, right? And you guys know that, you know, big pushes on the monthly, especially when you cross bullish, they tend to happen really quickly. So last time we were actually overbought on the stoke, and we started showing, you know, bullish closes on the monthly. You actually saw really big rallies, right? So we actually went from lows of 15 bucks to highs of, you know, $37. So a $20 move after, you know, we closed bullish on the month and we were overbought on the stochastic. You know, the same thing we can actually see right here. We are sort of kind of not overbought, but we're kind of in the middle of the stoke, closed bullish on the month, and we actually rallied from $14, you know, all the way up to 20 bucks, so about a $5 move. And again, you know, overbought on the stoke. Monthly close on the reverse MACD, you know, you rally from $14 to 24. So again, relatively, you know, a $10 move on the upside from every single monthly close, which I think, you know, you will close a bullish month, you know, from, what is it called? From these, you know, these lows, roughly, maybe in the next 60 or 70 days or so. I think a $10 move from here, you know, is very, very, very likely. I think we can definitely hit $37 in the next, you know, 60 days or so. You know, and I would definitely be, well, I wouldn't say definitely, but you even have divergence, right? So you actually have exaggerated divergence right here. So you have, where are we? Like right here, right? So you have divergence right there. And then relative to the stoke, after creating bottoms down here, you actually have divergence already playing out. Oh, whoops, I thought I created it, but here. Sorry if I'm panting, I'm just still like finishing running right now. But you have divergence right here. Why isn't this getting created? There we go. Right there. So you do have divergence from here, like April 5th, the early days of April, to, you know, relatively early September. You have exaggerated divergence. You're bouncing on the bottom of support, of that 27 support, and you're bouncing off the 50 MA. So you have way too many confluences to tell you otherwise. And I think that, you know, I think there's a really small chance that you actually, you know, don't hit, you know, $34, $37 in the next 2 months. I did see the 4 hour. So the 4 hour looks like it might actually break bearish to the downside. You know, so I wouldn't be surprised to actually see, you know, ELY after here, maybe go down here, retest, and then start its run to 37 bucks. So, you know, whether you're, you know, basically any range between $31 and $29, I think is a solid entry to be buying ELY. Again, you know, somewhere in the middle, let's say you buy 30 bucks and you actually have to take, you actually have a target of, you know, $37, you're looking at a 23% swing to the upside. I mean, I think it's a pretty good swing. I think it's a really good chance of hitting. I think there's like a 90+% chance that ELY is actually at $37 within the next, you know, 2-3 months. This is a swing that I would take every single day. There's too many things that are going right now with ELY. You know, if I had like, let's say I had 100 bucks, right? I would buy 50 bucks here, and if we go down to $29, I buy another 50 bucks there. Or if you want to put your whole position right now, like I said, it's just a recommendation of something I would do. Personally, I would probably buy all in right now because personally I would buy, you know, right now, or maybe sometime in the next, you know, couple of days after you actually see the 4-hour close bearish, because I can definitely see it come back down or at least trade sideways before running again to the upside. But you know, generally anywhere between this range I think is pretty solid, because you're still seeing a 20% to the upside. So I mean, depending on how much you spend or how much you buy in, that's a relatively pretty good return in 2-3 months. So yeah, this is something I would take the swing all day long. I'll see you guys later. Bye bye.